So it looks like we are going to have a new president in January, and we're getting a lot of questions from clients about how this will affect not only their investments, but their taxes. So let's talk a little bit about that today. And let's start with investments, because I know people are a little bit worried about the stock market.
Well, there's always some question when we have a new president, what's going to happen to the stock market? Well, I can assure you that there's nothing to panic about, whether it's a Republican or a Democrat in office. In fact, if you look at this chart here, we've gone back to 1933. And we show you here whether it's a Democrat presidency or a Republican presidency, regardless of the party of an elected president, stocks historically have tended to go up. So you can see that here by the blue or the red, Democrat or Republican, the markets march on. And this is really because business owners, entrepreneurs, executives, they're smart, right? They're gonna play the hand that they're dealt. They're going to adjust. Companies will find a way to overcome regulations or taxes or whatnot, and they're gonna find a way to make money in the system.
Now this chart makes it look like it always goes up, but if you look at it closely, there are some dips.
There are some dips. In fact, I have another chart here, Amber, that shows the odds of being positive. So we go back to 1926 in this. The years in red are the years where the stock market, as measured by the S&P 500, lost value. The years in green are the years that it gained value. You can see winners outpace losers about 2-1. And there have been 20 years where the market gained more than 30%, but there have only been 3 years where the market lost more than 30%.
Okay, so the story here then is that, yes, there might be some fluctuations, but it comes back, so don't panic. Write it out, and we've actually done a video about this that you'll want to check out if you haven't seen yet. But don't panic if there are some fluctuations, it will correct itself.
Right, just stick to your risk tolerance score, right? If your risk tolerance changes, then there'd be reason to make a change. Otherwise, just let it keep going.
Okay, so you need to talk to your financial planner, check out your risk tolerance, and make sure you are invested according to that.
That's right.
So let's talk a little bit about taxes and what a President Biden tax plan might look like.
Well, President Biden's made it very clear he does not want to raise taxes on anyone making less than $400,000. So that's kind of his cutoff. So we want to talk about what happens if you make more than $400,000 and what about those making less than $400,000, because there will be changes. So we are going to quote out of the taxfoundation.org, who's pulling most of this from the Joe Biden website. 3 things for those making over $400,000. He wants to raise your taxes on your Social Security. He wants to raise your income tax rate, and he wants to raise your capital gains tax rate. So for most people watching this video, they're probably not in that boat where they're making more than $400,000 as an individual.
But for those of you who are in that boat, make sure that you have a tax plan in place and talk to your financial advisor about that. And if you need some help with that, you can click on the link in the description and talk to us about it.
Now, if you're making less than $400,000, Joe Biden will tell you that he's not going to raise your income taxes. And that's probably a factual statement, right? He does not plan on increasing the income tax rate on those making less than $400,000 a year. But you will have an increase indirectly. So let me explain. First of all, Joe Biden has announced that he wants to raise corporate income tax rates. Now, Amber, when a corporation, no, this is not some big mysterious corporation. This is your local Walmart or Target or local bakery even, or Mexican restaurant, right? When taxes go up at these places, they pass the cost on to the paying customers. So while Joe Biden might not increase taxes on those earning less than $400,000, if you're still buying stuff and eating stuff, you're probably going to be paying more for that, and that's an indirect increase, okay? Second thing, he said he'd like to get rid of the step up on basis at death. Now, what does that mean? That sounds very technical, okay? Here's what that means. Under current law, when someone dies owning stocks or bonds or mutual funds, the capital gain tax liability is wiped away. Any gain goes tax-free, and they can now pass that to their beneficiaries tax-free. He wants to do away with that. Now, I know a lot of people who earn much less than $400,000 a year who inherit things from their parents. That will now become a taxable event under Joe Biden's plan. So again, not a direct tax on you making less than $400,000, it's technically going to be on your parents' estate if you're expecting an inheritance.
So if you're concerned about this, you need to make sure that you have, or your parents have, an estate plan in place, not only for this one, but also for number 3 on our list, which is...
The number 3 on our list, the way that Joe Biden will indirectly increase taxes on those making less than $400,000, is he wants to reduce the estate tax exemption from $11 million and drop it down to $3.5 million. Now that sounds like still a lot of money, but you need to understand, think of a married couple, Amber. When you add up everything you own, have access to, or control over, your home, your real estate, your IRAs, 401ks, life insurance if you own it, okay? Businesses, right? All of these things, anything over $3.5 million is going to be taxed when it passes to the next generation. And so there will be an indirect tax there as well. Again, not on you because you'll be dead, but it's going to be on someone. So the taxes will get raised for those making less than $400,000 indirectly.
So again, make sure that you have an estate plan in place if you fall into this category and you are concerned about that. So what do all these changes together mean for income?
Well, to quote the taxfoundation.org, their research claims that the Biden tax plan by 2030 would lead to about 7.7% less after-tax income for the top 1% of taxpayers and about a 1.9% decline in after-tax income for all taxpayers on average. So it means that taxes will be going up to pay for some of these programs, and that's not unexpected. Remember, Amber, if Congress and the new president do absolutely positively nothing, he can pass no changes. Taxes are already going to go up on January 1st, 2026. That is the current law today. So regardless of whether he's able to pass these changes or not, tax rates are going up.
Okay, so what do we do to prepare for this?
Well,
we've talked about it.
Yeah, we've done a couple videos. Roth conversions, right? If you have an IRA, 401k, now is the time. Start paying this tax now before tax rates go up, because then that way in the future, if they're higher, you've got some tax-free income you can draw down.
So takeaway from all of this is that you need to do some tax planning, you need to do some estate planning, and not panic.
So if you're not one of our clients, you can click on the link in the description below, watch our masterclass, and then apply to become one of our clients, because you can make the rest of your life the best of your life.
Plan now to retire happy.